guys, welcome back to the channel JK World 035, and we're back with the series of book reading, The Psychology of Money. So today's episode 18. 18. The topic is the seduction of pessimism. So optimism sounds like a sales pitch. Pessimism sounds like someone trying to help you. Okay. Let's read. Listen carefully. Optimism is the best fit for most people because the world tends to get better for the most people most of the time, but pessimism holds a special place in our heart. Pessimism isn't just more common than optimism. It also sounds smarter. It's intellectually captivating, and it's paid more attention than optimism, which is often viewed as being obvious to risk. Before we go further, we should define what optimism is. Real optimists don't believe that everything will be great. That's complacency. Optimism is a belief that the odds of a good outcome are in your favor over time, even when there will be setbacks along the way. The simple idea that most people wake up in the morning trying to make things a little better and more productive, then wake up looking to chew trouble is the foundation of optimism. It's not complicated, it's not guaranteed either, it's just the most reasonable bit for most people most of the time. The late Sandian Hans Rosling put it differently: I am not an optimist, I am a very serious possibilist. Now we can discuss optimism's more compelling sibling, pessimism. So, December 29th, 2018, the worst year for the economy in modern history is about to close. Stock markets around the world had collapsed. The global financial system was on day-to-day life support. Unemployment was surging. As things looked like they couldn't get worse, the Wall Street Journal published a strong story arguing that we hadn't seen anything yet. It ran a front-page article on the outlook of a Russian professor named Igor Panarin, whose economics views reveal the flair of science fiction writers. The journal wrote, around the end of the June 2010 or earlier July, Panarin says the US will break into 6 pieces, with Alaska reverting to Russian control. California will form the nucleus of what he calls the California Republic and will be part of the China or under Chinese influence. Texas will be the heart of the Texas cluster of states that will go to Mexico or fall under Mexican influence. Washington DC and New York will be part of an Atlantic America that may join the European Union. Canada will grab a group of northern states. Prof. Panarin calls the Central North America Republic. Hawaii, he suggests, will be a protectorate of Japan or China, and Alaska will be subsumed into Russia. This was not the rambling of a backroom blog or tinfoil hat newsletters. This was on the front page of the most prestigious financial newspaper in the world. It is fine to be pessimistic about the economy. It's even okay to be apocalyptic. History is full of examples of countries experiencing not just recession but disintegrations. The integrating thing about Panarin type stories is that their polar opposite forecasts of outer course optimism are rarely taken as seriously as prophets of doom. Take Japan in the late 1940s. The nation was rooted by defeat from the World War II in every way, economically, industrially, culturally, socially. A brutal winter in 1946 caused a famine that limited food to less than 800 calories per person per day. Imagine if a Japanese academic had written a newspaper article during this time that said, chin up everyone, within our lifetime our economy will grow to almost 15 times the size it was before the end of the war. Our lives expectancy will nearly double. Our stocks market will produce returns like any country in history has rarely seems we will go more than 40 years without ever seeing unemployment top 6%. We will become a world leader in electronic innovation and corporate managerial systems. Before long we will be so go rich that will own some of the most prized real estate in the United States. Americans, by the way, will be our closest ally and will try to copy our economic insights. They would have been similarly laughed out of the room and asked to seek medical evaluations. Keep in mind that the description about in war is what actually happened in Japan, the generation after the war, but the mirror opposite of Panarin looks absurd in a way of forecasts of the doom, doesn't pessimism? Just sounds smarter and more plausible than optimism. Tells someone that everything will be great and they are likely to either shrug you off or offer a skeptical eye. Tell someone they are in danger and you have their undivided attention. If a smart person tells me they have a stock pick that's going to rise tenfold in the next year, I will immediately write them off as full of nonsense. If someone who's full of nonsense tells me that a stock I own is about to collapse because it's an accounting fraud, I will clear my calendar and listen to their every word. Say, we will have a big recession and newspaper will call you say we are headed for average growth and no one particularly cares. Says we are nearing the next Great Depression and you will but mention that good times are ahead, our market have room to run, or that a company have huge potential, and a common reaction from commentators and spectators alike is that you are either a salesman or comically aloof of risks. The investing newsletter industry has known these for years and is non-polluted by prophets of doom, despite operating in an environment where the stock market has gone up 70,000 fold in the last century, including dividends. This is the true beyond finance. Matt readily wrote in his book The Rational Optimist, a content drumbeat of permission usually drowns out any triumphalist song. If you say the world has been getting better, you may get away with being called naive and insidious. If you say the world is going to go on getting better, you are considered embarrassingly mad. If on the other hand you say catastrophe is imminent, you may expect a method genius award or even the Nobel Prize. In my own adult lifetime, the fashionable reason for the pessimism changed, but the pessimism was constant. Every group of people I asked thinks the world is more frightening, more violent, and more hopeless, is short, more dramatic than is really is. Hannah's Rosling wrote in this book, Factfulness, when you realize how much progress humans can make during a lifetime in everything from economic growth to medical breakouts to stock market gains to social equality, you would think optimism would gain more attention than pessimism, and yet the intellectually allure of pessimism has been known for ages. John Shorter Mill wrote in the 1940s, I have observed that not the man who hopes when others despair, but the man who despair when other hope is admired by a large class of person has a cigar. The question is why, and how does it impact how we think about money? Let's repeat the permission that no one is crazy. There are valid reasons my pessimism is seductive when dealing with money. It's help to know what they are to ensure we don't take them too far. Part of it is intellectually and unavoidable. Kahneman says the asymmetric aversion to loss is an evolutionary slide. He writes, when directly compared or weighted against each other, losses loom larger than gains. This asymmetry between the power of positive and negative expectation or experience has an evolutionary history. Organisms that treats are more urgent than opportunities have a better chance to survive and reproduce. One is that money is ubiquitous, so something bad happening tend to affect everyone and captures everyone's attention. So that isn't true of, say, whether a hurricane barreling down on Florida poses no direct risk to 92% of the Americans, but a recession barreling down on the economy could impact every single person, including you. So pay attention. So this goes for something as specific as the stock market. More than half of the all American households directly own stock. Even among those that don't, the stock market generation are promoted. So heavily in the media that the Dow Jones Industrial Average might be the stockless households must watch the economics barometer. Stocks rising 1% might be briefly mentioned in the evening news, but a 1% fall will report in bold all caps letter, usually written in a bold blood red. The asymmetry is hard to avoid, and while few questions will all try to explain why the market went up, is when it's supposed to go up, there is almost always an attempt to explain why it went down. Are investors worried about economic growth? Did the Fed screw things up again? Are politicians making bad decisions? Is there another show to drop? Narrative about why a decline occurred make them easier to talk about, worry about, and frame a story around. What did you think will happen next? Usually more of the same. Even if you don't own stock, those kind of things will grab your attention. Only 2.5% of Americans owned stock on the eve of the Great Crash of 1929 that sparked the Great Depression, but the majority of Americans, if not the world, watched in the amazement as a market collapsed, wondering what is single-eyed about their own faith. This was true whether you were a lawyer or a farmer or a car mechanic. Historian Eric Ridgway writes, this fall in value immediately afflicted only a few Americans, but so closely had the other watched the market and regretted it as an index of their fates that they suddenly stopped much of their economics activities. As the economics Joseph Schumpeter later wrote, people felt that the ground under their feet was giving away. There are two types that will affect your life whether you are interested in them or not: money and health. While health issues tend to be individual, money issues are more systematic in a connected system where one person's decision can affect everyone else. It's understandable why financial risk gain a spotlight and capture attention in a way few other topics can. Another is that pharmacists often extrapolate present trends without accounting or how market adapts. In 2008, environmentalist Lester Brown wrote by 2013 China would need 98 million barrels of oil a day. The world is currently producing 85 million barrels a day and may never produce much more than that. There go the world's oil reserve. Heads right, the world would run out of oil in the scenario, but that's there is an iron law of economics. Extremely good and extremely bad circumstances rarely stay that way for long because supply and demand adapt in a hard to predict ways. Consider with what happened to oil immediately after Brown prediction. Oil prices surged in 2008 as a growing global demand, much of it from China, crept up to potential output. A barrel of oil sold for $20 in 2001 and $138 by 2008. The new price meant drilling oil was like pulling gold out of the ground. The incentives for oil producers changed dramatically. Hard to top oil supplies that weren't worth the fight at $20 a barrel. The cost of drilling didn't offset the price you could sell it for became the bonanza of a lifetime. Now that you could sell the barrel for $138. The sparked a surge of new fracking and horizontal drilling technologies. The earth was hard, roughly the same amount of oil reserve for all of human history, and we will know where the big oil disputes or for some time what changes in the technology, we have that. Let's use economically pull the stuff out of the ground. Oil historian Daniel Arjun writes 86% of the oil reserves in the United States are the result not of what is estimated at the time of discovery but of the reservation that come when our technology improves. That's what happened as the fracking took off in 2018 in the United States. Alone, oil production went from roughly 5 million barrels per day in 2008 to 13 million by 2019. World oil production is now over 100 million barrels per day, some 20% above what Brown assumed was the high mark. Two pessimistic extrapolating oil trend in 2008. Of course, things looked bad to a realist who understood that necessity is the mother of all invention. It was far less scary. Assuming that something will stably is an easy forecast to make, and it's presumed because it doesn't require imagining the world changing but problem correct and people adapt. Traits, incentives, solution is equal to magnitude. That's the common plot of economic history that is too easily forgotten by pessimists who forecast in straight line. A third is that progress happens too slowly to notice, but setbacks happen too quickly to ignore. There are lots of overnight tragedies. There are rarely overnight miracles. On January 5th, 1989, the Detroit Free Press pushed back against the long-held dream that man could one day fly like a bird. Aeroplanes, the paper wrote, appear impossible. The smallest possible weight of the flying machine with the necessary fuel and engineer could not be less than 300 to 400 pounds, but there is a low limit of weight, certainly not much beyond 50 pounds, beyond which is it impossible for an animal to fly. Nature has reached this limit, and with his utmost effort, and 6 months later, Orwell Wright dropped out of high school to help his brother Wilbur tinker in their backyard, straight to build a printing press. It was the brother's first joint invention. It would not be their last. If you had made a list of most important innovations of the 20th century, the aeroplane would be at least top 5 of not number 1. The aeroplane changed everything. It started a world war. It ended world war. It counted the world bridging gaps between cities and rural communities, oceans and countries. But the story of the Wright brothers' quest to build the first plane has a fascinating twist. After they conquered flight, no one seemed to notice, nobody seemed to care. In his 1952 book, An American History, Frederick Louis Allen wrote, several years went by before the public grasped what the Brits were doing. People were so convinced that flying was impossible that most of those who said them flying about Dayton in 1905 decided that what they had seen most by something without significance, somewhat it has most people today would regret a demonstration of, say, telepathy. It was not until May 1908, nearly 4.5 years after the Wright's first flight, that experienced reporters were sent to observe what they were doing. Experienced editors gave full credence to those reporters, excited dispatches, and the world at last woke up the fact that human flight had been successfully accomplished. Even after people crashed on their planes, wondered they underestimated it for years. First, it was seen mainly as a military weapon, then a rich people's toy, then perhaps used as transport a few people. The Washington's first wrote in 1909, there will never be such a thing as a commercial aerial fighter flight will continue to drag its slow weight across the patient earth. The first cargo plane took off 5 months later. Now compare the slow years-long awakening to becoming optimistic about the aeroplane to how quickly people pay attention to drivers of pessimism like a corporate bankruptcy or a major war or a plane crash. Some of the first mentions of the Wright's plane come in 1908 when an army lieutenant named Thomas Selfridge was killed during a demonstration flight. Growth is driven by compounding, which always takes time. Distractions is driven by single point of failure, which can happen in a second, and loss of confidence, which can happen in an instant. It's easier to create a narrative around pessimism because the story pieces tend to be fresher and more recent. Optimistic narratives require looking at a long stretch of history and development, which people tend to forget and take more effort to piece together. Consider the progress of the medicine. Looking at the last year will do you little good. Any single decade won't do much better, but looking at the last few years will show something extraordinary. For example, the age adjustment death rate per capita from heart diseases has declined more than 70% since 1965, according to the National Institute of Health. 70% of the decline in heart diseases death is enough to save something like 500,000 American lives per year. Picture the population of the Atlanta saved every year, but since the progress happens so slowly, it's captured less attention than quick sudden losses like terrorism, plane crashes, or natural disaster. We could have a Hurricane Katrina 5 times a week. Every week, imagine how much attention that would receive, and it would not offset the number of the annual lives saved by the decline in heart diseases in the last 50 years. This same thing applied to business, where it takes years to realize how important a product, a company is, but failure can happen overnight. And in stock market, where a 40% of decline that takes place in 6 months will draw congressional investigations, but a 140% gain that takes place over 6 years can go virtually unnoticed. And in case where reputations take a lifetime to build and a single email to destroy. The short string of permission prevails while the powerful pull of optimism goes unnoticed. This underscores an important point made previously in this book. In investing, you must identify the price of success, volatility, and loss aimed at the long backdrop of growth and willing to pay it. In 2004, the New York Times interviewed Stephen Hawking, the scientist whose incredibly modern neuron diseases left him paralyzed and unable to talk at age 21. Through his computer working, Hawking told the interviewer how excited he was to sell books to lay people. Are you always this cheerful? The Times asked why expectations were reduced to zero when I was 21. Everything since then has been a bonus. He replied, expecting things to be great means a best case scenario that feels flat. Pessimism reduces expectation, narrowing the gap between possible outcome and outcomes you feel great about. Maybe that's why it's so seductive. Expecting things to be bad is the best way to be pleasantly surprised when they are not, which ironically is something to be optimistic about. Now a short story about stories. So this is the long chapter of this book. So this is the chapter. So if you like this, please like, comment, share and subscribe to the channel. Update 035. So bye bye guys. So we'll meet in another episode.